Good evening and welcome to the second and the number 2 series of our tax series for the Wealth Roundtable. If you're just joining the Roundtable, I'm Tracie Taylor, and a little bit about myself. I've been working as a wealth strategist since 2001, so I've been in this industry for some time, and tonight it's my pleasure to introduce to you a woman who really helped me when I got involved in business, a woman that I met after I was drowning in issues of accounting. One of the things that we like to do here at the Wealth Roundtable is to help you build wealth. And in building wealth, one of the major things that you have to do is be accountable. Be accountable for everything. You need to know where you break even at. And so without a good accounting system, without a good accountant, that's not going to be the case. And so as it pertains to building wealth, tonight I want to again introduce to you my CPA, my superhero, Carol A. Reeve-Miller. Hi, Carol.
Hi, Tracie.
How are you?
I'm doing good, thanks. And thanks for the build-up.
Well, one of the things that I really want to talk about, Carol, tonight is when I met you. I think we probably have a 10-year relationship, whether it's in time or whether it's in taxes. And the reason why we have a 10-year relationship is because when I met you, I was working with a forensic accountant, and I never even heard of a forensic accountant at that time. But that person ended up going to prison for fraud. And so that's some of the stuff that we want to talk about tonight. How do you choose a good accountant? And what's the difference in having a CPA or an accountant, or are they both the same?
Well, they're not the same, and that's one of the main problems a lot of people run into. You look on Craigslist, you see someone who's a bookkeeper or an accountant, and you might find someone who actually knows what they're doing, but more than likely you don't. In the U.S., the only licensing that there is either an EA, which is an enrolled agent, and it's a person who's been background checked by the IRS, and what they have done is they've taken a 2-day tax examination, so they actually know something about income taxes. The other one is a CPA, which is a certified public accountant, and they're licensed by the state. So they had to take a 2-day examination on accounting, with 1/4 of it being taxes. So you want to look for someone who's credentialed either way. And just so you know, I have both. I just do one. I wanted to see if I could pass them both.
So tell us, Carol, a little bit about your background.
Well, let's see. I have been doing taxes since longer than probably most of the audience has been alive. I've been doing this now for 40 years, which I struggle to believe, but I started when I was very young. Okay, maybe not. I've been a corporate accountant. I've had my own practice now for 12 years. I have worked for KPMG, one of the larger CPA firms. It used to be one of the big 8, then one of the big 6. It's now one of the big 4. But I've done corporate taxes as well. And we have bookkeepers here and we have accountants here. So our focus, I guess you want to say, is on the small business.
On small business.
That's correct.
Well, I can tell the entire audience you kept me from drowning. I know that for a fact. When it comes to accounting and recording and taxes, that's just not my thing. So for those people that are like me, not detail-oriented, who want to keep it in a shoebox and bring it to you at the end of the year, can you tell me a good way to start working with a CPA or an accountant?
Okay, one of the best ways to work with a CPA, first off, after tax season, after April 18th, in fact, give us a couple of days after, maybe April 25th or after, is call one up and ask them if they can meet with you at no charge. You just want to review a few things. As with anything, meet with 3 people, get 3 different opinions. Trust your gut on this. If they're licensed appropriately, see who you're comfortable talking to. If they're pushing you to a flat program where they, X many dollars a month and you haven't even started yet, I would tell you to maybe back off, because how are they deciding what your bill's going to be when you're not sure how much work you're going to do? One of our practices is that we will work with you and we'll have a flat hourly rate. So if one month you're doing a lot of work, our bill's higher. You do nothing the next month, you don't have a bill. But meet with them, try to get comfortable with it. The Small Business Association has a lot of programs. One is called SCORE, SCORE, and it's for the Society of Retired Executives. They will meet with you for free. When you go to these, if you're in a big city, you will be assigned a mentor. Normally they try to get you a mentor who has done something that you've done. And again, check your personality. If somebody rubs you the wrong way for whatever reason, do not work with them.
So
go ahead.
So it's wise for us to ask for a meeting, the first meeting, at no charge.
It is. Now, some will do that. If they're established, sometimes they'll offer you half off. It depends on how busy they are and how long they've been doing it.
Okay. Realizing that we're at the end of tax season, corporate taxes were due when?
Corporate taxes were due March 15th.
And now what's in front of us is?
April 15th, which actually is delayed till April 18th this year. And that's when the partnerships are due, and that's when individual tax returns are due. And state returns are due typically April 15th. Some are not due until April 30th, and a couple May 15th.
Okay, and so for those of us that have not filed, what are some of the deductions that we can actually take up until April 18th? Is there anything else that we could do to limit or reduce our taxes between now and April 18th?
Well, typically the return that you're filing right now is for last year. So the only thing that you can do to affect last year's tax return are some retirement options, which could be setting up a SEP, a solo 401k, or an IRA, depending on your tax circumstances.
Now, is this something that we could expect our tax preparer to do for us?
No, and here's one of those sticky wickets. Some CPAs are everything to everybody. They're insurance agents, they're financial planners, they're CPAs, they'll write a will on the side. I always worry about somebody who has too many hats. With everything coming more and more complicated, I think it makes sense for you to build a team. You don't want one person to do it all. So I'm a great accountant. I am a lousy financial planner. If I tell you a stock to buy, just start watching it, it'll go down. I do not sell insurance. I feel that I would have a boundary problem if I were to do too many things. I might refer you to another, another purchase that might be in my best interest. So I will refer you to a marketing person. I'll refer you to a banker. I have connections with attorneys, insurance people. I'm not Superwoman. What I do really well. I go very deep in it, but I'm not everything to everybody. So if you wanted to set up, if you walked in my door and said, I need to do this, and I look at your numbers and the fact pattern substantiates it, I'm going to give you 3 business cards and say, call these financial planners, see which one feels right to you, and invest with them.
Perfect. I like that. When it comes to doing business, I absolutely firmly believe that you have to have a team. And I really like what you said, Carol. You can't be all things to all people. What you do, you absolutely do well. I wouldn't go anyplace else other than you. I don't care how much you go up. What your rates over the past 10 years, because you do a really good job. And, also, let me ask you a question. If a person is being audited, is it a special tax preparer that can stand before the IRS?
Okay, if any of my clients have an audit, the last person I want them to see is the IRS auditor. People get nervous when the IRS comes knocking on the door. So at that point, if you're not a client of mine and you want me to represent you, you'd come in, we talk about it, sign a power of attorney form. Then I contact the auditor. What I get to do, because it's me and not you, I can only respond to the questions that they've requested. So if they want to expand the audit, it'll have to be another meeting. And a lot of times they're under time constraints and they need to get everything wrapped up at that point. Plus, people tend to get nervous in front of the auditor, and I think I just said that. So if they ask you, what color hair do you have? And you're going to say, it's brown, and about that $3,000 I didn't report. People have just confessed things that they didn't mean to, but again, they're a little gun shy. So without them being there, I get to handle everything because it's not my money. I get to be a little bit more calm, a little detached, plus I know the tax code. So I bring a lot of value. So my clients don't go to audits.
Well,
Rule of thumb.
that's good news. That's really good news. So you don't recommend that clients talk to IRS agents?
No, because they're asking specific questions, and if you don't know exactly what they're saying, you might answer wrong, and now you've taken a 5-minute problem and made a 5-week one out of it. And I do want to let you know, your odds of being audited now are much slimmer than they ever have been, but the auditors that come out have been through this for 10, 15 years. They're very educated, they're very experienced. So the audits are a harder audit. On the flip side, a lot of audits now are mail audits, where you'll get a letter in the mail, and they'll say, on your return on this schedule, you deducted these items. Send us your proof. And what I do when I prepare returns, and I think a lot of CPAs probably do something similar, is we scan in all your documents. When I create a schedule, I have a work paper underneath it, so if you're ever audited and you get that letter, I can reply to it without bothering you. So I'll have the information, I'll send out the reply, and hopefully it's taken care of with the first letter.
I lost you for a minute there. Could you repeat what you just said?
I'll try to. A lot of the audits are mail audits. So you'll get a letter in the mail, and what they're going to ask you for is proof for a different schedule or form in that return. So when I'm getting your information for the tax return, I scan everything into my system. And then I create my work papers. And my work papers document every number on your return. So if you get a letter from the IRS asking you for proof of certain items, I should be able to handle it without even bothering you. So you send me the letter, I'll respond to it, send you a copy, and then we wait. And that's the hardest thing about an IRS letter. When they ask us for information, they normally want it within 10 to 15 days. When you write to them, it could be 6 months before you hear back. And there's a lot of anxiety in that 6 months.
Wow. I want to ask you a question. I work with people that are in the direct sales industry, more particularly network marketing. And I actually really work with a #1 money earner in my company. And one of the things that he shared with me is that when it comes to network marketing, direct sales, people aren't challenged with making the money. He said one of the things that they're challenged with is taxes. They kind of have challenges with taxes and end up in serious trouble. And I
We've seen it a lot.
I think that's because we're 1099'd, and for some reason we don't think that we should be sending in quarterly payments. Can you speak to that?
Well, first off, there's a couple of things with the multi-level marketing. If you are making over $30,000 with multi-level marketing, please set up an LLC or an S-Corp in your state, because having that kind of money flowing to a Schedule C will greatly increase your audit risk. It will, and the audit will not be a pleasant one. The IRS has trained groups. They have audit guides that are issued for multi-level marketing, and a lot of it is because a lot of the receipts are not kept. If you have weekly meetings, monthly meetings, they give you the little cardboard receipt, keep those. But the IRS believes that a lot of the multi-level marketing is more of a social engagement than it is a business one. So if you are having, I don't want to say any company names, but a meeting, and at the end of the year you've sold $600 worth of merchandise, but you're claiming $8,000 in mileage, and you went to a convention and some meals, they're going to say that you are doing this for social reasons. It's not a business. If you are making good money with it, we want to move you to one of the forms that are less likely to be audited, which is why the S-Corporation or an LLC that's even taxed as an S-Corporation, because it'll reduce your audit risks, and we can do a lot more planning on retirement for that. You have to follow rules. If you do the S-Corporation, you'd have to pull out a salary, but you could do a defined benefit plan where you can put over $100,000 a year away pre-tax and retirement. There's so many opportunities with that. You have to be smart. It has to pass, we call it the smell test. Again, you're claiming $600 of sales and you're writing off $10,000 of expenses. That's not reasonable for anybody. And we see those returns.
Oh boy.
Now, when you start out, let me not make you afraid of this. When you're starting out, you are going to spend more money. You're going to more meetings. You're buying a lot more materials. You're getting the literature. You're setting up your website. That makes perfect sense. It's when you've been doing it for 2 and 3 years and you're still not selling. That's where the audit risk comes in.
Got you. So, one of the things that I like that you said is, and I actually really like LLCs because I think that that's even better than just a regular S-Corp. I think that it limits our liability, but it's not for everyone, and you've got to talk to your own tax preparer to find out what's right for you. I don't like receiving income in my own personal name, and that's something that people that get involved in network marketing companies don't really understand. When you are making those big bucks, you don't want to accept that income in your own personal name. You want to put it in a corporate name.
That's correct.
Yeah.
And the big difference for the LLCs, and let me go ahead and remind everybody, I am not an attorney, but within corporation, you have to have annual meetings. You have to have a minute book. You have to keep track of it once a year at the minimum to ensure that you are running as a corporation. The great thing about LLCs is that you don't have that requirement. You still have a book, but you don't have to fill it out every year. The requirements are much easier. Now, LLCs typically cost more per state. You know, I think in North Carolina it's $35 a year for a corporation. It's $200 a year for an LLC. But you don't have the requirement of keeping up that annual book. And everybody listening is saying, well, how hard is it to do the book? It's not. It's very easy. Just nobody does it. And if you were to get sued and the attorney on the opposing side asks you for your book and you're like, oh my gosh, where is that thing? And what have I done for the last 10 years? You've already lost the case. It's called piercing the corporate veil, and they can go after your personal assets. So that's why most attorneys push everyone toward the LLC. It's a little bit easier to protect yourself in court.
Okay. So for the business owners on the line, what are some of the questions that they should actually ask in that interview process?
I'm sorry, can you repeat that?
Yes, for the business owners on the line, when they're interviewing a CPA, what are some of the questions that they should ask in the interview process?
Well, first off, I would ask them, tell me a little bit about yourself. What's your background? What is your favorite kind of client? Who do you like to work with? Because if somebody wants to only work with people who are into oil drilling and you don't oil drill, they're not going to serve you well. Ask them, do they handle clients that are just starting up? Is there a certain threshold? What do you recommend? Who do you partner with? Do you have partners who are attorneys, financial planners, insurance agents? Because you want a resource for you that you can go to when you have a problem and say, Carol, well, in my case, Carol, I need this. Can you help me? And pretty much I can get anything anybody needs. I've been doing this for enough years, and I've got a great network. So you want to make sure they're networked. And then you want to ask, if I'm doing this, how would you guide me? Do you think an LLC is better? Do you think an S-Corp is better? And then after you get their information and bring questions to this meeting, have your list, and then ask, and then write down the answers, and then go see the next CPA and do the exact same thing. Because you want to be able to match answer for answer. Another thing I look for is, do they have brochures? Do they have information to give out to someone who's new? Because when people are meeting with me, I know they remember everything I say, but then the minute they walk out that door and they're driving home, they're like, oh my gosh, what did she say about that? So I try to make sure that there's brochures for them to take home. If they have something that they ask me for, I'll run them a sample so they can see what the numbers look like. Because I'm a concrete person. I need to see it and touch it and read it before I get it. And then you want to make sure you write your questions down before you go in. Everyone forgets the important question, and then they're walking out the door and like, oh my gosh, I wanted to ask her this. It was the most important thing, and I forgot. So make sure you write them down. And I give people my business card, and it's got my email address on it. I know that they're going to forget something. And that's something I do want to tell people. If you have a CPA or accountant and it's 11 o'clock at night, because my goodness, my entrepreneurs are always burning the midnight oil. If you call your CPA, make sure you leave your name and your phone number. Every 3 weeks or so, I'll get a phone call, and there'll be somebody really urgent wanting to know something, and they spill out everything, and then they hang up, and I have no idea who it is. So I know somebody is waiting for an answer from me, and I'm disappointing them because I don't have a name or a number. Or a better thing, I think, especially with today's technology, is email them. This way you can spell out your question, and then you've got a written trail of what's occurred.
Very well. And so here's another question that I have for you. As a CPA, should I expect that you could help me grow my business?
It depends on what you're looking to do. So let me take a step back, and I'm going to answer your question. When a new client comes in, the first thing I talk to them about doing is writing up a business plan. Now, I do not want to read a 500-page dissertation that somebody's written about every little thing where they're buying their paper clips at Staples and their Staples at Office Depot because the prices are cheaper. I'm looking for 2 to 3 pages. What are you going to do? Why are you going to do it? And how much do you think you're going to make? So I want that written down first so we have a baseline, something that we can measure every couple months. Every now and then I'll get a client who gets so wrapped up in being their president and owning their own firm that they didn't realize they only made $10,000 last year, and they'd actually make more working at Walmart. So we need something to measure. Then the second thing I talk to them about is setting up a retirement account. Now, I am well aware that nobody who's opening up a business today is opening up a retirement account tomorrow, but I'm trying to get it on the horizon. Because when you work for yourself, you're responsible for your own retirement, and nobody else is going to be there. You have to do it. So we talk about that. We also talk about setting up children with their retirement accounts. And I know that sounds odd, but if you have a child who you could use as a model for your business, they can shred papers, they can clean a bathroom, they have to do bona fide work. You can pay them. It's a business deduction. And then they can, as long as they have earned money, they can set up a Roth IRA. And there's some great tax strategies there. I mean, I love the idea of little kids being millionaires when they retire. Would have been nice if our parents could have done that for us. But there's a strategy there. There's a strategy of if you have a business and your kids are going to college and they're taking business classes and they're your bookkeeper, then you could pay for some of their education that way. There's a lot you can play with in that case. The next thing we talk about is location of a business. Now, in today's internet market, it's not as important as it used to be, but for me, I have a brick and mortar store. People come and see me. They want to make sure that I exist and I'm in a place that they feel safe at. If you are doing homes, you're going to the locations. If you're a painter or a contractor, again, your location isn't as important. Then we talk about buying equipment. Does it make sense to buy it? Does it make sense to lease it? Most cases, it makes sense to buy it, not lease it, but there are always those exceptions, so we can talk about how to set it up. We talk about building a team where you have a banker, a marketing person, an insurance agent, a business mentor, a CPA. We also talk about the hardest thing to find, and that's a devil's advocate. People tend to agree with you, whatever you want to do. If I said I want to fly to the moon tomorrow, I could probably find 5 people who say, oh, Carol, that's a great idea. What you need is that one person that said, are you nuts? What are you thinking about doing that for? The person who is the devil's advocate will do one of 2 things. They're going to dissuade you, which apparently wasn't a good idea in the first place, or they're going to get you to sharpen your focus so that you will do this and you will excel. So we need those in our lives. We talk about customer service. Customer service will make or break any business. If you are cranky, no matter how good you are, you're going to drive people away. We talk about setting pricing. Pricing is tough. Typically, the people I meet, men tend to overestimate their value and women tend to underestimate. Men figure, I only need 5 sales at $1 million each and I'm good for life. Women are like, well, if I do it, anyone can do it, so it's worth 50 cents. So you have to set your price where you make enough money that it's worth doing. I don't want you to work 40 hours on something and say, oh, thank goodness it's done, and I netted, $100. Because the next time your enthusiasm will be gone and you're going to do a bad product. It's just human nature. We also talk about taking care of your vendors. So if there are certain people you work with, you bring them little gifts at Christmas or a donut or a cup of coffee one day. There will be a time you're going to need them, and you want them to, when they think of you, to smile. And there's little things you can do. Not everything costs money. If you go to the local bank, and every time you go into the bank, you wave at the bank manager. You don't have to say hi, you just wave and smile. Sometimes you might have a cash crunch where you need money today, but your deposit's not coming until tomorrow. If they know you, you've kept your account well, sometimes a manager can do things for you. But again, they're only going to do it if they know who you are, if they know your face. So those are the things I typically go over with a new person. You know, we talk about payroll, we talk about insurance needs, but I refer them to insurance agents. But I have a good understanding of what they need to do.
Should we expect that the accountant can do payroll for us?
Most accountants do payroll. We do it for a small bit as a concession. We like to keep it in-house, so I see where your payroll and I see where your numbers are. So during the year, I can take a look and make sure everything's in balance. And if I see something where your salary is really high, but your business is struggling to make that payroll, I might call you up and say, okay, it's time to lower your payroll. I've had to do that. Never a fun discussion. What's more fun is, oh my gosh, look how much money you made. Your payroll is now unrealistic. You have to have reasonable compensation. And let me explain that just a minute. When you own a business, you get paid for it two ways. One, you get a paycheck just like everybody else. You are trading your dollars, your hours, pardon, for the business dollars. So you have to be paid a reasonable compensation. Now, when a business is starting out, reasonable compensation could be low because the company doesn't have the money. The other way you get paid is through shareholder distributions, and that's the pay you get for investing in the company. So again, one company, but two revenue streams, one as an employee and the other as an owner of the business.
And one question that we all want to know is, how much can we expect to pay from bookkeeper on out to CPA, I would imagine? Because I know in your company you have bookkeepers, and people can find bookkeepers in other places. But how much should people expect to pay when it comes to, I would say, a professional bookkeeper, and then, you know, CPAs? Like, can you give me a range of?
Well, I've seen bookkeepers on Craigslist for $25 an hour, and pretty much avoid those. We've seen bookkeeping firms that actually do a decent job, and they normally start at $50 to $60 an hour. Our staff accountants, if we're on a yearly contract, is $84 an hour. If we are coming in for a special project, it's $95. I know the big CPA firm I work for, they were $160 an hour. So you can pay anything. Now, if you have a good rapport with the CPA and they've done your books and you want to go cheaper and hire somebody local, what I always suggest to clients is that have them do your books for a month and bring them in and let me look at them. Let me tell you, if you have a good person, I have actually lost 2 clients, and it was horrible. They went cheaper, so we would do their books, and what we do in an hour typically takes another accountant 2 to 3 hours because we stay focused, we're well trained, this is what we do. We download information, we make it as quick as possible. They went somewhere else. We got their books after a year. The books were hosed. So what we had to do, we keep a backup of your file. We went to last year's and we redid the whole year for them. Well, we had to do it quickly because they didn't want to extend. They had paid for somebody, so they were already angry. And we gave them our bill, and they're like, why are we paying for this again? I'm like, you paid somebody else. They did it wrong, remember? And it's a bad situation. And again, we're the ones that they got angry with because we were the ones in front of them. Life isn't always fair. We understand that. We're adults. So if you go and hire your neighbor's kid, you hire the cousin, you hire somebody you met at church, just have your CPA review the books and make sure the person knows what they're doing. The great thing about software is with Quickbooks, you can run pretty much any business. The bad thing about software is people think that they have an education and an accounting degree when they've only taken a 30-hour class in Quickbooks. You can't equivocate a 30-hour Quickbooks class with a 4-year accounting degree. If you could, I really am overeducated. And then sometimes we'll train our clients on how to use QuickBooks. We'll show them how to do receivables and payables so they can bill. And we can typically teach them this in about 3 hours. We have a program that we use, Cubebox. So we'll put your QuickBooks file there. You can log in. We can log in. You're busy, we'll do the books. You're slow, you do the books. But this way we're sharing a file. But we teach you enough how to keep everything going. We're not going to teach you how to be an accountant in that time, obviously. But we can give you enough tools that you can get the process going.
So in essence, you're participating in the process of bookkeeping.
Exactly. Well, here's the thing. We're not one size fits all. Tracie, you know, when you get slammed and you're flying in and out and you're not even sure what city you're in this morning, we're taking over for you because you just don't have the time. Absolutely. And then if you have some downtime, well, okay, if you have downtime, you still don't want to do your books sometimes, but you have the ability to. Plus, we want to teach you how to do it. Accounting can be a very useful tool. A lot of people look at it as that necessary evil that the government makes us do. And I can't tell you how frustrating it is when somebody comes in at the end of the year, they bring their little shoebox, and they say, can you tell me if I made money? Like, how have you not known all year how you're doing? What part of your company makes more money? What makes less? How are your assets? Do you have money in the bank? And they're like, I don't know. What did I do this year? It's like, no, this is your livelihood. Can you imagine IBM being run that way? They'd be out of business. If you keep your books up, you'll start to see where your trends are. And there's so many ways of doing things. And I have to be honest, I love what I do. But if I can take a small business and say, okay, this 1/3 you're losing money. Oh, you love to do it? Okay, well then keep doing it. Or you don't, well, get rid of it. Focus where your money is. And a lot of firms will use us because they realize they're not good accountants. So they might pay us $84 an hour, but then they're freed up 4 hours for every hour we're working, and they can go sell, or they can go build their whatever they do. So they don't have to worry about it. And there's lots of different programs. Some people see us every month, some people see us once a year, and everything in between.
And so right now I'm going to let the audience know that they can ask questions right inside the Wealth Roundtable. And Carol, I will give you any of the questions that I see. I'm popping back and forth over there. So far there are no questions from the Roundtable. But another question that I wanted to ask you is, so my business is really flourishing. Can you help me with ideas on how it is that I could reduce my tax burden?
Well, the first thing we do is we look and see where you're making your money. For some companies, it makes sense to set up a management companies. Some it makes sense to set up a retirement plan. Sometimes we hire the kids and we pay them. It depends on how you're making the money, but we do have financial planners we work with. We do have insurance people we work with because there are a lot of different ways of handling things.
Okay. And I heard you say that QuickBooks is the software that you prefer?
Years ago, I used to use Peachtree, and it was the first one out of the box, and I absolutely loved it. For the last 10 years, QuickBooks has been the one to use. QuickBooks Pro, you buy it, it's typically about $200. The cheapest prices I've found have been on Amazon, but look for yourself, and you can use that software for 5 or 7 years. Now, if you do payroll in it, it's only good for 3 years. But the software is cheap. It's typically taught at all the community colleges, so you can learn how to do it. And QuickBooks has specialty programs for contractors, for nonprofits, and they're always sold at a premium. I will tell you, I haven't found one of those that was truly worth the premium if the person using the software knows how to use QuickBooks. So if you see QuickBooks for contractors, unless you really want a sophisticated job costing system, you won't need it.
I see. So, Carol, I don't have any more questions. We've gone 35 minutes. I don't have any more questions from the Wealth Roundtable at this point. But before we close over the next 10 minutes, is there some things that you'd like to share with the audience in terms of moving forward in next tax season? Because, as you said, we're at the end of the tax season where you get your amazing break and you get to travel the world for at least a week. of being on full time and in your office. I see those guys going back and forth in your office, so I know you're still grinding it out in the office right now.
Yeah, we tend to work late on Tuesdays and Thursdays. So the first thing I would do with your tax return for this year, if you have filed, is take it out and look it over. See what you have paid, see what your deductions were. Hopefully your CPA or whoever prepared it has given you some planning activity for the year. The one thing I want you to look at is what your effective rate is. I want you to take your total income divided by your taxes, federal taxes paid, and that's your average. So you now have a business, you're starting to make money. You need to set aside at least that amount. If you are self-employed, the self-employed employment tax is very high. You have to take your total income, you multiply it by 92.35%. That's the taxable amount. Your Social Security tax when you are self-employed is 15.3%. It works out to about 14.25 on every dollar you earn. So if you were in the 20% tax bracket, you add that self-employment tax, and then you add your state tax, and you can be paying in 40% taxes. That's where the planning comes in. If you have your own business, you're just starting, you've just made a couple $1,000s, don't lose sleep on it. Once you've hit about $10,000, you need to see somebody. You want to make sure you have enough taxes paid in. If you owe more than $1,000 to either the federal government or the state, when you file, you can pay penalties and interest, and there's no sense paying any extra money to Uncle Sam. So you can gauge it yourself. One other thing, since I've got a little opportunity here, one of Carol's pet peeves is if you have a business and you run your business through your personal checking account. Please, please, please don't do that. What will happen is you have an audit, and now they're looking at your personal checking account, and let's say Aunt Mary wrote you a $25 check for Christmas or your birthday. And thank you, Aunt Mary. You have to prove to the IRS agent that that was from Aunt Mary and that was not business income. A business audit becomes a nightmare. It is quicksand if you commingle the money. Goes the other way around too. You have a business checking account. All you do in that business checking account is pay your business bills, pay your salary, and take a shareholder distribution. You do not go grocery shopping. You do not buy yourself anything personal. You don't go to Victoria's Secret and buy something. You keep your business account as a business account. Once you start commingling the funds, the audits get nasty. Plus, you don't want your bookkeeper and your tax accountant to see where you're really spending your personal money, and that's none of our business, and we really don't want to know. Other thing you need to be aware of, and everyone knows about, is the Affordable Care Act. You must have health insurance. If you have a small business and pay for the health insurance through the business, it's actually not allowed as a deduction on the business return. But we take it off the business return, we move it to your personal return, and it's 100% off. So I personally pay for my health insurance through my company, and I do the adjustment every year. Another thing that a lot of people are talking about is not to take the home office deduction. And that was true about 20 years ago. For those of you who want to look up things, look up the Solomon case. It was an anesthesiologist in Chicago. He had a home office where he had a bookkeeper come in and bill all the insurance clients. The IRS, when they audited him, said the most important things he did was put people to sleep for surgery, and they disallowed his home office. And he brought up the point where if I don't get paid, I'm not going to work. So he was in Chicago, knew some attorneys, had some money, and he was able to get the law changed. So as long as you have to have a place, the IRS recognizes that you have to have a place to do your bookkeeping. So it doesn't have to necessarily mean that you meet clients there, but if you have a place that's regularly and pretty exclusively used for business, a desk, file cabinets, you can write off part of that off your taxes. And don't be afraid to do it. It's not the red flag that it used to be.
Well, thank you for sharing that, Carol. Carol, I want to talk about your Facebook page. I went to your Facebook page, your corporate Facebook page, and I read something about the IRS being able to confiscate your passport. Can you talk to us about that?
Yeah, the IRS is getting very serious about going after your taxes. If you owe, I think it was over $50,000, and you have not reached out to them, they can pull your passport back. Homeland Security, so if you've are trying to leave the country, they can take your passport and deny you. It's getting scary. They're also looking at hiring collection agents again. So if there's anybody out there who has not filed their taxes in the last couple of years, who owes the IRS and is kind of playing the duck and hide game, please stop. It's not as truly, it's harder to avoid something than it is to face it and get through it. We've all screwed up in life. No one is ever going to judge you for history because we all have history. You have to face it and you have to work through it. There are many plans. If you are truly broke, there's an offer and compromise program. There's a fresh start initiative. The IRS is trying to work with you. Sometimes what seems like an insurmountable debt can be broken down into easy payments. What I always try to get people to do is stop the bleeding. So whatever caused all the historical problems, stop it now. Let's fix it so going forward you don't create them. Okay, now we fixed it. Now what do we have behind us? Let's take it. Let's look at different ways of how to repair it. And if we can make it in a compromise or a fresh start, we'll do that. If we set up the old-fashioned payment plan, we can do that. The IRS is actually pretty easy to get a payment plan going. As long as the debt can be paid in 5 years, it's under $50,000, they have to accept the payment plan. Interest right now with the IRS is 4%, but it's the failure to pay penalties that get you, and they can go up to 25% of your debt. So if you owe $10,000, those penalties could be $2,500. Then you add the 4% interest every year. So again, the quicker you address it, the better you are. If you have messed up one time and only one time, you can ask them to delete the penalties, but you have to pay off the debt first.
That's some good.
But avoiding the IRS doesn't work. I promise. Tons of people have tried. It doesn't, for some reason. And that kind of brings me to something. A lot of people, when they open up a business, they run out and they buy all sorts of gizmos, new computers, new cell phones, new whatevers. Don't. See how the money works. I promise if you start making them, they'll still be selling those things when you go to buy them. But don't run out and just buy all the toys because you have a business. I can't tell you how many business people I've seen overextend themselves, charge up every credit card they have, cash out the 401k, and then 3 months later they absolutely have nothing, and it breaks your heart. So I don't want you to jump out with everything. I don't want to scare you either, but you have to do things with knowledge, with your eyes wide open.
So what I've heard you say is that if we're going to be in business, that we probably need to create a business entity. And I guess in some states, depending on which business you use, which business you are doing, you'll also need a business license. So from the business license to the entity to finding a good bookkeeper and or CPA and developing a plan for the coming year.
Perfect. And you can, again, SBA has offices in every state and a lot of the major cities, so you can look for them that way. The local community colleges normally have a small business program as well. I know here in Charlotte we have CPCC, and I've taught there several times, partnering with the IRS and the SBA. And I'll tell you what, those classes, there's 50 to 150 people in there. It's pretty amazing how many people want to start their own business. And they say that small businesses account for most of the jobs that are created in the U.S. So this is happening. This is real, guys. This can be you.
This is so true. And, you know, the tax code favors the entrepreneur over the employee. So I like the fact that we can write off so much as a result of being business owners. And there's so many ways that we can save money. As you said, Carol, I always like to tell people 30 to 40% of your wealth will be given away if you don't properly structure your tax program. So I would really appreciate you being here tonight. Let me just double check and see, are there any questions on the Wealth Roundtable? So far, I don't see any questions on the Wealth Roundtable, Carol, but in signing off, what would you say to us?
The big thing is be knowledgeable. Keep your eyes wide open. Step out in strength and with knowledge, and surround yourself with a really solid team. No man can do it by himself, no woman either. And if you have any questions, my website's ladycpa.com, or you can get through me through Tracie.
Okay, Carol, I'm going to put your Facebook page in the Wealth Roundtable. We really appreciate you taking the time in your busy tax season to talk to us, and look forward to having you back again in the later part of the year. This Wealth Roundtable is so that we could start having conversations that are, for some people, hard to have. These conversations is information that they want to know, but they don't even know where to ask or where to get the information. And since I have such an amazing team, I decided that I wanted to do a little roundtable. Let's talk about these things. We've got to start talking about them. So again, Carol, we really appreciate you for being here. This is live streaming now, and it'll be available immediately after the live stream in the Wealth Roundtable. And Carol, you can also hit that on your YouTube page. So thank you so much for joining us.
You're welcome. You have a good night, everybody.
You too, dear. Good night.
Good night.